Chapter 12 for Principles of Accounting. So this week we focused on the statement of cash flows using the direct method, and next week we'll be preparing it using the indirect method. So the statement of cash flows has three sections: operations, investing, and financing. So we're going to look at each one of those sections with an example, and then we're going to prepare a full statement of cash flows. So first, we're going to look at the operation sections, or the operating section. We have information from their income statement and information from their balance sheet about changes in accounts. So our cash flows from operating activities. This section shows what our cash flows are based on our everyday business activities, also known as operating activities. The first line in the operating activities section, when you're preparing using the indirect method, is net income. So we start with the net income or loss. In the case of this example, we have a loss. We then make adjustments for non-cash items. The non-cash items in the income statement are depreciation expense and gains and losses. So we have no gains or losses in this income statement, but we do have depreciation expense. Depreciation is a non-cash expense, so we add it back to net income. After adding back or making adjustments for non-cash items, we do the changes in current liabilities and assets. So we have four changes here. We have an accounts receivable decrease. We have that we purchased a machine for cash, salaries payable increase, and an other accrued liabilities decrease. Only three of these are going to end up in the operations section. And the one that isn't going to end up in the operations section is this purchased a machine for cash. Purchases of long-term assets go into the investing section of the statement of cash flows. So we have accounts receivable, the salaries payable, and other accrued liabilities. So our accounts receivables decrease. A decrease in a current asset means that we received cash for that asset. So we are going to add in that decrease. If it had been an increase in accounts receivable, we would subtract it. There is a handy chart in your PowerPoint slides that I discussed in the lecture. There are a couple of those PowerPoint slides that'll be really good references to keep for when you're working on your homework. Salaries payable increase. For current liabilities, when they increase, we add them in the statement of cash flows, and when they decrease, we subtract them in the statement of cash flows. So we're going to add that $18,000 for the salaries payable, and we're going to subtract the $8,000 for the accrued liabilities. So we have our net cash provided by operating activities, and we add up all of these items. If we show the subtractions as negative numbers in Excel, then we just have to add them together and we don't have to add, subtract, add, subtract, add, subtract. So we get the net cash provided by operating activities of $32,600. Our next example, we're going to look at the investing section. The investing section is when we make investments in our organization. So our property, plant, equipment, and any other long-term assets. So other long-term assets can include intangible assets and stock investments that we purchase for our own investment purchases. Any of our own stock sales would go into the financing section, but if we purchase stock, then that goes in our investing section. So we would have cash flows from investing activities, and all four of these activities is an investing activity. So we have a property transaction, we have two equipment transactions, and we have a investment transaction. So first, we receive cash from the sale of equipment. So we received, what we know is that it has a book value of $65,300 and we had a loss of $14,000. That means that the cash we received for that equipment was $14,000 less than the book value. So we take the book value, $65,300, minus that loss of $14,000, and that tells us how much cash we received from that sale. We purchased a new truck with cash. We paid $89,000 in cash for the new truck. And we sold land that cost $154,000 for $198,000 in cash. So we would use both of these numbers if we were preparing a journal entry, but in the statement of cash flows, we just want the amount of cash from that transaction. And then we sold stock. Remember, this isn't stock in our own company. This is stock we had invested in as a company. So we sold those for $60,800. Okay. Now we want to make this 89,000 a negative number because that was cash going out. If we add those all together, this gives us net cash flows from investing activities. That is $221,100. The last section of the statement of cash flows is the financing section. What goes in the financing section is the sale of stock, payment of cash dividends, purchases of treasury stock, so any transactions involving stock and dividends, and any notes payable, short-term or long-term, bonds payable being issued for cash. The interest payments for any of these activities actually end up in the operating activities section. So cash flows from financing. So we're going to look at the various items that we have here. So the first thing we see is net income. Well, net income is actually the start of the operating activities section, so we don't need that information. Then we issued common stock for $64,000 cash. So sale of common stock. And we received $64,000 in cash. The next item is that we paid cash dividend of $14,600. Dividend, that is $14,600 going out. So we put that in as a negative amount. We paid $50,000 for a note payable. That's 50,000 out. And we paid 12,000 in cash to purchase treasury stock. And the last item in our information says that we purchased equipment for $39,000 cash. So equipment actually goes in the investing section and not the financing section. So since we're working on the financing section, we don't need that information. So now we have the net cash flows from financing activities. And we add all those up, and we see that our net cash flows from financing is negative $12,600. In the next video, we're going to prepare a full statement of cash flows, and then I'm going to go through a really quick example that's going to help you with homework questions.